All right, welcome everyone. So, have you ever actually stopped and wondered what happens when you tap buy on your phone to get a piece of a company? Like, where does that specific piece of ownership actually live? Well, let's dive into this explainer where we demystify exactly how the financial system keeps track of what you own in the stock market. We're going to explore the invisible electronic engine of market ownership.
First things first, let's clear up a super common mix-up. Stocks is really just a broad umbrella term for company ownership. You might hear someone say they own tech stocks or Amazon stock. But shares, those are the specific, countable units of that stock you actually buy. So if you want to be exact, you'd say you own 10 shares of Amazon. It's a subtle distinction, sure, but a really important one as we look at exactly how these individual units are tracked. Okay, here's our roadmap for this explainer. We're going to hit stocks, shares, and equities, look back at the physical paper trail, check out the electronic ownership revolution, take a peek inside the digital depository, and wrap up with why these electronic records actually matter to you. Kicking things off with Section 1, Stocks, Shares, and Equities. Now, you might hear the word equities thrown around a lot. That is really just the fancy, formal term used in financial markets for your total ownership stake. And when you own these shares or equities, what you can actually do with them depends heavily on the class you hold. Common shares? Usually, those let you vote on big company decisions. Preferred shares, on the other hand, well, they generally skip the voting rights, but they make up for it with other financial perks. But here's a wild stat for you. Who is actually out there doing all this voting? Surprisingly, only 21% of American families own shares directly in their own name. Just 21%. The vast majority of us own shares indirectly. We hold them through mutual funds, exchange-traded funds, or pension plans. So in those setups, the fund managers are literally holding the shares and pulling the levers on those voting rights on behalf of everyday investors. Moving right along to Section 2, the physical paper trail. So historically, proving you owned a piece of a company meant holding on to a tangible physical piece of paper. Imagine something like a vintage 1936 Greyhound Lines share certificate. Your name was literally printed right on it, and you'd lock it away in a safe somewhere. It was the ultimate physical proof that you were a part owner of that corporate venture. But I mean, just think about the absolute logistical nightmare of that system. If you wanted to sell your shares back in the day, you had to physically deliver those paper certificates completely attached to signed transfer deeds. It was an incredibly slow process and honestly super vulnerable. You risk damaging them, losing them, or worst of all, dealing with fully forged documents. Imagine having to literally mail a piece of paper across the entire country just to finalize one single trade. It created immense friction in the markets. Which sets us up perfectly for Section 3, the electronic ownership revolution. Enter the Central Depository System, or the CDS for short. This was an absolute game changer. It completely revolutionized how the market works by taking all those paper certificates and replacing them with highly secure electronic book entries. Basically, it eliminated all that physical maintenance and manual transferring once and for all. It pulled the entire market out of dusty paper vaults and dropped it right into hyper-secure digital databases. And look, this wasn't just some local fix. This is the absolute backbone of the global financial system today. All over the world, you have these massive central securities depositories, places like Crest in the UK or the DTCC over in the States, and they act the invisible digital custodians of all global trading. It's wild to think about. They hold the ultimate electronic records of who owns exactly what across the whole massive market. A great way to think about the CDC is just like a bank, but for your securities. Just like your normal bank holds your cash digitally, you don't literally have a cardboard box of dollar bills with your name on it sitting at the bank branch. The central depository company holds your shares electronically. When you make a trade, you aren't passing paper around anymore. You are simply updating a highly secure digital ledger. All right, Section 4. Inside the digital depository. Let's see where your shares actually live. Let's pop the hood here. When you're dealing with electronic shares, you actually have a couple of options for how your digital records are held. You can keep them in what's called a sub-account, which your broker maintains on your behalf right alongside all their other clients. Or if you want the absolute highest level of security, you can use an investor account. That's where you, the investor, have direct, secure contact with the depository itself. And you can actually see this in practice. Take a look at the specific field for a CDC account number on the standard account opening form. That, right there, is the vital link. It connects your everyday trading account at the brokerage directly to the central depository system, making absolutely sure that your electronic book entries are always perfectly synced up with your trading activity.
Finally, Section 5. Why electronic records matter.
So, why is all this invisible, behind the scenes infrastructure so incredibly essential? Well, it all comes down to market efficiency. Electronic records give you strict confidentiality. They completely wipe out the risk of, say, losing your physical shares in a house fire or dealing with forgeries. Plus, and this is a big one, if a company issues a dividend or bonus shares, those entitlements hit your account instantaneously, literally zero delays. And that digital speed, it makes rapid settlement cycles possible, like the T+3 system. Your trade gets executed, it's immediately netted in the system, and the balance is seamlessly settled electronically via book entry in just 3 days. That dramatically reduces market risk, and it's all thanks to the shift away from physical certificates. Now, working perfectly hand in hand with the electronic depository is the National Clearing and Settlement System, or the NCSS. This system provides vital market stability by capping systemic risk, and it introduces just extraordinary transparency across the entire market. It's basically the electronic traffic cop, making sure the cash and the digital shares swap hands smoothly and securely. Since we've seen how physical paper evolved into these highly centralized electronic book entries, it leaves us with a pretty fascinating question to ponder about where ownership goes next. Now that physical shares are a thing of the past, how might decentralized technology, like blockchain, change ownership tomorrow? Are we going to shift from central depositories to distributed ledgers? It is for sure the next great frontier in the evolution of markets. Thanks for tuning into this explainer, and I really hope this helped you understand the fascinating digital engine driving your investments.